She said to cancel.
Regular budget.
Yeah.
Please,
She
everybody,
said it was like assessment or unpaid maintenance for payments or whatever.
$6,000. Where is that coming from?
Well, if you were, okay, so the first phase is the 40-year certification. Do you remember having your external electrical panel upgraded? We had collected enough money in that assessment. There's 3 phases to the 40-year certification. There's checking the roofs, the structure, and upgrading the electrical. The electrical, we had enough money in that bank account of our assessment to pay that first portion of the 40-year certification, right? So what is, do you have?
We also paid to Austro. We also paid to Austro the first payment for the project.
Oh, yeah, which is
And still left us about $200,000 left.
Yeah, so that, all of those years, the advice of council way back then, because we couldn't get a loan, and like Carol explained, we were not in a position because banks have a certain formula. They look at default, unit owner defaults, they look at how many, coming out of 2008, the housing market, our bank account went really, really low. We had a lot of unit owners that bellied up. So throughout the years, we've been able to build our normal operating account, and then we started that assessment to get something, because year over year, so for those of you who are rather new to the association, year over year, historically, this association has always voted down reserves. So what does that mean? We never saved for a rainy day, right? In 2025, I don't know if you know about the new Florida statute legislation. In 2025, Florida condominium associations will no longer have the choice of voting down reserves. And starting in 2025, all Florida condo associations must fund reserves. The good news story to that is our roofs will be fairly new, so that useful life, and when we do a reserve study, is going to be over a longer period of time than most associations that maybe their useful life is only 5 years. They have to save a lot of money in 5 years to get some of that stuff down. So that money, what financials were out, August or September?
August.
I don't have the August here.
I have it.
What was your balance so far in August for?
$200,271.
All right, so we paid out the first payment to the contractor upon $465,000 from that money, which was part of the contract terms once the contract is signed. And from there, we've also paid out the engineering fees that they had to do. So a lot of the stuff that's related to this project, we had money, thankfully, but over the years it was $50, and some units are a little bit more.
And some are a little less.
And then if you remember in August, we suspended that $50 because then we had the insurance increase, and we had to cover the last few months of this year. And I remember being on the phone because I was on vacation, and I told everybody that was present, this is just to get us through the end of the year. 2023, you're going to see a substantial jump, because now we have to budget for the entire year for this insurance, okay? So the two phases, the 2 areas of the 4-year certification that are left are the roofs and any structural things that were identified as part of the 40-year or items that were found during the engineer's inspection that will be fixed, right? But I'm not going to get off track because this is about 2024 budget, but we are going to have soon, and I need to work with the management company, we're going to have phase meetings, because remember, this project, every phase stands on its own. So when you're voting on color, whatever there is to vote, you're voting just for your phase. So you don't have a vote on phase 4, phase 3, or phase 2 if you're in phase 1, and vice versa. So those meetings are coming, and we're probably going to do some Saturday meetings, get our contractor in here, our engineer in here. We're going to have a project team meeting with each phase, right? But what we have to do, first of all, we are going to be having some workshops, because we have to talk about staging, because there has to be product that has to be staged throughout these phases, and there's also going to be, we have to start picking the order the buildings are gonna be done. The order the buildings are gonna be done are those that have reported issues. Those are the buildings that are going to be tackled first, like phase 4, Miriam's building and Mr. Cobetta's unit, that is building number 1 in phase 4 that's going to be done. So we're gonna try to work, logistically, it's better to work back going forward, but we're actually gonna pick, based on maintenance history, which building is critical that gets done, because they have, documented roof leaks and things like that. So that's how that goes, but I don't wanna deviate, because I'm a little bit deviant, but thank you for your question. All right, so, yes, sir. Yeah, it's too early for that. So the contractor's gonna have set up in this room some samples of the replacement for T111. We're not gonna be using T111, we're gonna be using hardy board. The samples of the shingles for the roof. They're going to set up just outside this building. The board has chosen 2 colors. You're gonna see a sample of the 2 building colors with the fence, the complementary fence color to that building color, right? So he's gonna be setting up something, so the contractor will be setting up the room so that you can come and see visually what some of the materials are gonna be used. And that's coming down the road. Right now, he's dealing with, the permit phase, and that can be extremely long, okay? All right, so, Carol, do you wanna give an update on proxies before we begin the meeting?
So basically what we need is, we need a majority from each of the phases to submit their proxy. Because the proxy is good for 90 days from the date of this meeting. So those of you who've been here in the past, after the meeting, we never got enough proxies at the meeting. People would go knocking on doors and get the rest of the proxies, and we collect them over the next week or so. So phase 1 has 31 units. We need 16 proxies to have a valid vote. 16? 16. We have 13. That means we need 3 more. Not bad. Phase 2 has 32 units. We need 17 proxies, so it's a majority. We have 18. Phase 2, got it. Phase 3 has 33 units. We need 17 proxies. We got 17. Phase 3. Phase 4, Patty. We need 32 units. We need 17 proxies. We only have 12. We need 5 more. So phase 1 needs 3, and phase 4 needs 5. So I've got spares here, I've got extras, I'll read them with you.
Let me have, because I know who's missing in my case.
Yeah, we can just pull out the rest. I think there's a budget on top there.
Okay, great update. Thank you, Carol. Now, are there any others?
We have to make one change to the budget, because I had a typo in there.
You have a cycle?
In phase 3,
Okay.
so if I can point you to phase 3 to the board. For the management fee for the year, I don't know why Alma had this last year, but I kept it. $1,000 is close to $4,500. So we need a board vote, discussion, board vote to make that change.
Is this the same as it was in 2022?
2022. 2023, she made a mistake, and I apologize for 2024.
The accurate number is 45, they're split?
They're all 4,500.
They're all 45,
Yes.
per phase.
Yep, you got it.
Last,
Per year.
for this year, they were only charged $1,000. So,
No, it wasn't only charged, it was what was budgeted. But the charge is correct.
I'm not even looking
All right.
at that because it's going to
You want
be.
to do the board?
So the question is, that don't increase that in this state?
Yeah, it's gonna increase phase 3 by $2, absolutely. So, absolutely.
For the year.
For the year.
And what is this for exactly?
This is the monthly, this is the management fee, and phase 3's share of the management fee, we separated out by the 4 phases, is $4,500 a year. And and somehow he had 1,000 in here. So, the mistake was made last year, and I followed it through, and that's why Blair, I think, pointed it out to me, and I thank her for finding that, because it's wrong. It's 4,500 for the year. So, we'll let the board do this. So you just have to vote to make that change. And that's really it. And then, are we gonna have a discussion about the insurance?
I think we've had enough discussion about the insurance. I don't want to talk about the insurance anymore. I have to go ahead and open my review sitting there. Okay, so, are any of the board members have any other additional regarding the error in phase 3? Eric? No? All right, so then I make a motion, first of all, acknowledging the error that was identified and corrected in the 2024 proposed budget. All in favor?
Wait,
I'll second.
I'll second it.
All in favor?
Aye.
Okay. All right, so what has to happen, we have to mail out this budget because there's a change to it for only phase 3. We'll cover the cost of that mailing, because it's our error.
Okay. All right, thank you, Carol. Are there any other discussions regarding the 2024 proposed budget at the table? Eric? No? All right, so I think we're at a point we can make a motion to accept the proposed 2024 budget.
Would you like to make that motion since you just said it?
Didn't I say? I said I'd like to make a motion to accept. Is there anybody who wants to second it?
Second.
Independence.
Yeah.
There's not today.
Introduce yourself and what your role is on the board.
Sure, sure. You were hearing the introduction for Carol, correct? Where?
I'm the secretary treasurer. I've been with the, I'm an
Original unit owner.
I'm an original unit owner. I've been here since 1978. Can you tell I don't like change?
Patty Salas, president.
Eric Richards, vice president.
And
Jay, management. Sorry, Frank.
All right, so there's a motion on the table to accept the proposed 2024 annual budget.
I will second that.
All in favor?
Aye.
Aye.
No.
Noted. All right, so the budget passes. So right now, what I'm going to do is I'm going to end this meeting, and we're going to go right into, we're going to start the meeting for the assessment meeting. Yes, ma'am.
The 3.
On the assessment,
Sorry, ma'am?
not the regular budget, the extra assessment that's for the roof and the other capital expenditures, correct?
The meeting that we're going to open now is about this new assessment. This is, as we discussed, the association finally got approved for a line of credit, which will then be converted to a loan. That's the funds that are going to be used towards the re-roofing, any structural issues that need to be addressed. And, again, we're going to have separate meetings to discuss details of once you see those meetings, come, because you're gonna have the entire project team here. You're gonna have the engineer, the attorney, the contractor. You're gonna have, obviously, the board, and most likely someone from the accounting firm that you.
I just want one question. I don't understand all of those, but the assessment, how long is that amortized over? For how many years?
Yeah, I need to close the 2024 budget meeting, and we'll talk about the assessment.
Okay.
All right, so I, motion to end the annual 2024 budget meeting.
Yes.
All right, great. Now, we have the other, here's the notice. Great. All right, so now we are opening, starting our assessment meeting. Again, today is October 24th, and this, again, the agenda item is strictly based on the new assessment. Now, going back to your question, ma'am, yes, we were seeing, how many years was that assessment? 10 years. That one, if you recall, was ended in September? August.
Was the last page.
Because we suspended that one to help take care of the final months of the insurance type that we had. We had to fund that insurance increase. Now, this assessment, special assessment that you receive, has to do with the actual project, okay? And the project is in combination with 40-year certification. So, over a year now, our engineer and the contractor that we selected have been working diligently on getting filing reports, getting them to the city, and then finally, we were on hold, we couldn't move forward with anything, because the bank, we couldn't get a bank to approve us. Finally, how many years did it take to get a bank to approve us? No, about 6. It took 6 years for a bank to provide us a loan. So, because this association voted down reserves, we couldn't move forward with anything. Luckily, the money that we had, we got to do part one of the 40-year certification was to take care of the electrical panel upgrade. That part is done. Now, there's two things left. Re-roofing, because all our roofs are, if not, they're at the end of their useful life. And then any structural repairs that were noted during the engineering report when they did the 40-year inspection, okay? So that's what this assessment is about. So the insurance assessment, Carol, that's current in place, that has to be suspended because that's already rolled into the budget, correct?
It goes through December.
It was voted through December, so we don't have to worry about it.
Then it ends, and then
The new assessment, okay.
Right, we only did for those 4 months.
Yeah. Are there any questions about the assessment for, okay, yes, ma'am. Okay, we're gonna do the same thing, please, because it's already 8:30, I wanna make sure everybody has the opportunity to speak, so let me just set the timer on. All right. Okay, go ahead.
How many years is it going to be set for?
Okay.
So there's a 24-month line of credit, and there's 240 months. The bank was generously gave you a 20-year loan. So 24 months during the construction phase, you have a line of credit period. So that's basically what we're in right now. So we are going to have the ability to draw the money down while the contractor is moving along. He's going to be, Jay knows how this works, he's going to be doing certain things according to the contract. He submits a bill for that portion of the work, and then we send it to the bank approves it, and we cut the check. That's how it works, they fund the money. So, this is the whole process as we move forward on this project. So, he doesn't get paid all the money up front, it doesn't ever work that way. But as he moves forward, he does get paid in advance, but it's all in the contract. The amount of negotiations that went on with that contract were phenomenal. I have to be honest with you. So I sit in a lot of these meetings. They did a great job, and your attorney did a great job, in my opinion. I've seen a lot of these meetings. I don't know, Jay, what you thought, but I thought it was very good. As we get to the end of the project, the loan converts to a term loan. So the project's done, we don't need any more draws, it's gonna lock in. That's when the 20 years begins. So, this is a 6.75% loan, what was it? I have it here somewhere. I'll find it, I have it here in my paper somewhere. So, it's going to be a 20-year loan. So people are going to be given the option, for those who might want to pay it in full, they're going to be given the option to pay their whole amount of the special assessment in full. That's what is the paperwork, the numbers that was sent out. If you choose to go into the 20-year loan, then you're gonna be given, you'll see what your amount is. You're not gonna have to start paying that money back until the work is done and the loan is locked in. So, but we're gonna give a limited amount of time, usually 3 months, for people to pay their share in full. This is a big amount of money. You all know that. This has been coming for a long time. So whether it's 30,000 or 40,000, whatever the amount is for your type of unit, you're gonna be given that option to pay in full. So why would you wanna pay it in full instead of going into the 20-year loan? Maybe you have yourself a low interest loan that you have monies available in the equity in your home. Maybe you have some other source of money that you've decided, I'm not getting this amount of money, this loan is, I'm gonna give you the percentage in a moment, is 6%, 7%, whatever it is. I have money invested at 5%. It would pay for me to take the money out and pay, because I'll make money on that. You'll save money. So you have to make your own decisions. I can't advise you, I'm not your accountant. If you have a tax accountant, that would be the person I would ask to see which one you should do. So you can either pay in full by a date certain, or you're gonna go into the 20-year loan. So whoever doesn't pay in full, when the project is done, you're gonna get coupon book in the mail for this. And that's gonna go on for 20 years.
Isn't that two different phrases? The loan is a 20-year loan. Okay, and then is there a separate assessment?
So there's 2 things going on here. A special assessment for $4.6 million.
Right, and how long does
Now,
that last?
well, hold on, let me explain it, because I think you're confusing yourself. So, everyone gets special assessed based on how much each of the 4 phases cost to do this work. That's how it's working. It's not the normal percentage, because phase 4 is built different than the other 3 phases, so the amount and the cost is a little bit less, based on the way that they're built. So, we've gone through all these meetings and heard all of these things. Everyone's being special assessed their share of the work, $4.6 million. How you pay your share is up to you. That's where the loan comes in. So if you pay your share in full, you're done. You never have to pay another thing towards this, you're done. You don't go into the loan, you don't pay interest, nothing, you're done. If you choose to go into the loan, which most people do, just to let you know, you're not gonna pay anything up front now. You're gonna wait till we send you the coupons, when the project is done, and we lock in the loan. That is what's gonna be the monthly amount that I have on there. So for instance, I'm just gonna take on phase 1, 2 bedrooms. Your share is $40,200. If you go into the loan, you're gonna pay, in addition to $40,200, interest. Your share of the interest is $3,857. So, you have to make your own decision exactly. If you want to pay your share off, or you want to go into that loan for 20 years. In addition, the board is going to discuss, and they're going to vote on, if upon resale, this is due in full. That's a board vote, that it comes back to the board for a vote. So they're going to decide that. If that is the case, anytime a homeowner is selling, the estoppel is going to state, there's a special assessment for this amount, this is their share. The way the loan works, once it's locked in, and the work is all done, at any time, you can choose to pay your share off in full and be done. What happens is they will re-amortize the loan once a year for free. So we're going to tell you how much you have to pay to December of that year. We always do that in December. Doesn't matter when the loan starts, it's always in December. And then we'll tell you, so if you want to pay your share of the loan off, your share was $40,200, but now, and based on interest, you would have paid $3,800 in interest, but because your share is $42,000. Whatever the number is, we have amortization schedule that's over the loan. And we're going to give that to you. 6.75, there we go. So we're going to give you those numbers. It's going to be offered to every homeowner every year. Most people are never going to do it. I'm just telling you the truth. But if you sell your home, it's gonna be done at closing, so you wanna negotiate that. You're gonna know that as the seller. So you need to negotiate that at the closing table, and make sure. Because you don't wanna be in for a big surprise that they're taking 40 grand out of your proceeds, right? The good news is, once the work is done, somebody said the values are 250 now, your values will go up. And when you look at $40,000 after the work is done, let's say 2 years from now, I'd be curious to see if it doesn't go up $40,000. So everything we've seen, the amount of money people put into it is usually what they get back in value, just to let you know.
So that's about $300 a month for 20 years.
Yes, ma'am.
In addition to the other increase.
Well, that's gonna come down, remember, we don't know what it's gonna be, but it's gonna come down.
Okay, and the other increase that has been sent out is advertised over what period of time?
What other increase?
Well,
What is it? But the insurance is in the budget.
the reserves that you're looking for. Am I confused?
Well,
I think you're waiting about 2025.
All right, well, we're not there.
We're not there yet.
No, 2024, we're just talking about the reserve, proposed common area reserves, like $1,100.
Yeah,
Those
but
are
we
the
got the
proxies
vote, that's
for
what the
time.
proxies were for tonight.
All right.
And we just need a few more proxies, 3 for building 1, phase 1, and now 4 for phase 4.
Okay, well, what were they advertised over? Let's just say it goes through.
Well, there's a straight line method in the budget. If you look in your budget itself, you're going to see at the bottom of each page, reserves. So phase 1. So roofs were valued at $740,000 for phase 1, and it's a 20-year life, and so it's a straight line method. This is the formula from Florida statute, right out of Florida statute 718. That's where this formula comes from. They call it the straight line method, but you don't have reserves. So the only thing you have is a little bit of money sitting in payment, and you're gonna utilize that.
What will be paid by each homeowner will be their monthly maintenance, which is what we just voted on before. And when the construction is completed, their portion of that loan. There won't be any other special assessment other than that loan repayment. I'm sorry, what? Okay, the windows are your responsibility, we have nothing to do with that.
Okay, so let's,
See,
we have a lot of questions, so let's start our process. Mary?
Question, when I first moved in, the windows and the doors were included in the insurance. Now, when did that change?
It didn't. Look, you need to look in your docs. Look in your condominium docs.
Miriam, we had hoped that we would be able to include windows and doors in the restoration project, but that didn't work out because of the cost of the restoration project in total and the impact it would have on the homeowners. A lot of homeowners have already replaced their windows with impact windows or put up hurricane shutters. They don't want to be assessed to pay for somebody else's when they've already paid for their own. So because our documents clearly state that the windows and doors are the homeowner's responsibility and the cost would have been prohibited, it was backed out of the process.
From the $50 assessment that we're paying? From the $50 assessment? When that $50 assessment came out, it was for windows and
It was
doors.
for the restoration project as
Yeah, the only thing I brought was
a
this
whole
stuff.
entity. We had hoped that it would include the windows and doors. Bottom line is, if we want to do the windows and doors, it won't be 4.6,
We'll get there.
4.7 million that we had it out alone for. It would be 5 point something, which the bank won't give us. So, here we are.
If this was the maximum amount the bank would loan, this was it. And luckily, you had the other money you had collected already to do the electrical and some of the other 40-year work, and then to give the down payment for the first deposit to your contractor, so.
Marion, you have more time. Do you have anything else you wanna add? Okay. Yes, ma'am.
I just was curious, let's say 3 years from now, 5 years from now, interest rates drop again to 2 points. Will you look at refinancing the loan?
So most loans can't be refinanced if the rate drops like that. However, what typically will happen is we'll go to the bank, see what they say, and try to negotiate something. So I would never say never. I've seen it happen a couple of times, but most loan documents say you can't take another loan out with another bank to pay this loan off. The only way you can pay this loan off early is from money from the homeowners.
Right, and we typically not, in a residential, you can pay it yourself, but you're not
That's
gonna be
right.
able to go around. So this is fixed,
It is.
6.75.
It's 6.75 for 24 months, that's the drawdown line of credit period. And then it goes to a fixed 7.46. That's the number you need to concentrate on, 7.46. You can get a better rate than that, I'm just telling you, if you have equity built in
So
your
this
loans.
number is this 27 is at 675, or that's?
Nope, this is at 7.46, because if you go into the loan, that means the line of credit period is 8.
So if you do the early payoff, are you doing it at 675?
If you do the early payoff, if you pay in full over the 3 months that we're gonna give you, you pay no interest. You're done. If you can pay the whole thing in full. If you cannot, and you wanna pay it off, let's say in 2 or 3 years, you're gonna pay 7.46, but only until December of the year you're paying off it. So I always tell people, don't send a check before October or November. Ask us for the payoff then. Why would you give me money in April when you're gonna have to pay the interest through December for that year? So, banks will refinance and re-amortize the loan for free once a year.
Anything else, ma'am? You have time?
No, thank you.
Okay. Yes.
When, if I wanna pay the full pay, when would I have to pay that?
We're going to, the board is going to decide that there's a board vote, and usually we recommend at least giving you 3 months, three payments to pay it off. And we would send everybody, per their instructions, what they vote on, that instructions and 3 coupons. They might say 4 coupons, they might say 5, they're gonna tell me. So they're gonna discuss that and tell us. So you have to have it paid in full by the last date. So let's say the last payment has to be by May 10th. I don't know what date, May 10th. You can wait till May 9th and pay the whole thing off then. You don't have to pay it all 1/5 in January if it's 5 payments, 1/5 in February, because that's the whole reason you have a line of credit. Now, you don't pay interest on the line of credit unless you draw the money down. The money we've already collected, I mentioned it earlier, we have about $200,000 left from that money we've been collecting for the $50 for all these years, after the things we've already paid for. The interest to pay the line of credit down during this period is coming out of that money. So you don't have to get assessed for that. Unfortunately, once they lock in the loan, that's when everything is done. That doesn't happen until the work is done. They have 24 months to complete the work. Because hopefully it'll be done in less than that, 12 months, I don't know.
Well, we gotta get it done, we're trying quickly so that we can get those mitigations.
Right. So June 2nd is your insurance renewal. Wouldn't it be wonderful if having the majority of it all done before then?
And if I'm selling, it'll come out of that.
You negotiate that in your price. It's gonna be collected at closing, I will tell you that.
But is that now?
If they vote for that, I shouldn't say this, if they vote for that.
So that now might be 27,449.
I don't know what the amount will be, depends upon when that happens. We have an amortization schedule, just like you would have with your own mortgage. We have that from the bank.
Yes, sir, I'm sorry.
So this is just roof, paint, and the site. That's it with the 40,000.
No. Without getting into the logistics, why I really need you to start going to these meetings when we have it, and if you were attending the meetings before,
You
you
didn't know
know.
about it.
I mean, the contract is a very intense contract, but just to give you an idea, the roofs are gonna be replaced. If you currently are living in a building which phase 4 does not have T111, it's gonna be replaced with party board. Is it party board?
Yeah.
Yes, we do have some T111.
Yeah.
Not a lot, we have some.
In phase 4?
Yeah, there's a little bit.
I know, yeah, there's a little bit.
Oh, okay.
In the upper structure.
Oh, yes. The front and back fences will be replaced. Right, and then the whole issue is, if you're living in a unit, and again, I don't wanna speak on behalf of the contractor or the engineer, because they're the experts, but if you have a unit that has older windows, that city will not pass the inspection for that building, because your windows are not up to code, or they need, some units have the original windows from 40 years ago. Yeah, so you can rest assured you're gonna have to deal with a window issue. Now, what we've asked the contractor to do is to get bulk pricing on these hurricane windows. He gets phenomenal prices on a very good quality impact window. That is a whole separate thing that we'll do with the contractor. He's gonna bring, like I said, over time before all these meetings, he's gonna have samples of things. But if you are going to replace your windows, and the contractor says the city will not pass the permit on this building because your windows are not acceptable or to code any longer, you're going to have to replace your windows. So you can take advantage. We wanted to get as much bulk pricing advantage, and he was able to do that with a manufacturer, a very good manufacturer that does impact windows. So you'll have separate discussions with unit owners. So if you know your chances are your windows are not going to pass, you're going to need to start thinking about that.
Are those the guys that came by
And measure.
about 3 weeks ago?
Oh, no, it's been longer than that.
Well, no, there was a guy walking around phase 1 at least, I don't know. I can't remember the name of the company, but he was walking around saying that he was with the contractor that they was gonna do our.
Yeah, he sent them out for double and triple measuring, because part of the contract was to actually stipulate each size of the window, so as an option for unit owners. So yeah, I guess they had to come back and just, because there's so many, what do you say?
There's a lot, yeah, there's a lot of different
Eight
sizes.
sizes of windows that they had to come back and remeasure for the contract to ensure that, the additional items was available to the unit owner. Yes, sir.
Yeah, gutters?
Oh, gutters are included, yes, and skylights.
Oh, and skylights.
Skylights are being replaced, yes.
Facial.
I would have everything.
These are real important questions.
What you're going to have to vote on each individual phase are things that are not going to be put back. For example, the decorated trellises are not included because the cost. First of all, we want to minimize the wood exposure, so you're gonna have to vote. If you vote for trellises, the decorated trellises back, your portion is gonna increase, because that's not in the original.
What about facial board, facial members, that could be hardy?
That's all part of the roof.
That'll be hardy board?
No, the fascia roofs are the
Fascia.
2x4s, is that what?
No, they're
No, it's gonna be a band.
No, okay, so we talked about minimizing the wood exposure for future termites and things like that. There's not gonna be wood banding around the windows, you're just gonna have a normal window with a stucco around it,
Okay.
right? So anything that's considered decorated, that's wood, we wanted to minimize that, because that has brought nothing but problems to this association. The less wood, decorated wood, the better. Yes, sir.
An acre, phase 3, 1704. Some people have, according to shutters. Now, once you replace that wood, they can put them back up.
No, and that's what these meetings are for. I don't have the details, but there are things like satellite dishes, shutters, people have screen enclosures. It's gonna be your responsibility to ensure when the contractor is ready to do your building, you're responsible to remove these items and put them back. But I don't wanna get that far, because that needs to come from the engineer and the contractor, so I don't wanna speak on their behalf.
Question.
Yes.
When were you gonna tell us about the City of Plantation liens and fines of $144,000?
Well, that's part of the 40-year certification.
Your duty was to notify us any kind of hazards against our property.
The what?
Any kind of hazards against our property. If the city deems these properties unsafe, they can demolish them.
So
Is that not true?
Well, you can
Well, my attorneys are gonna be asking questions too, so.
I'm not gonna
Okay,
speak, I'm not
that's
gonna-
fine.
I'm not gonna answer
Perfect.
anything.
At least the community knows now, they're aware at least.